More than 30 companies are currently in the pipeline to list on the Singapore Exchange, though the bourse declined to reveal the sectors and timeline of their debuts. The update came during SGX's financial results briefing, where it reported its highest full-year revenue and net profit since the year 2000. Kate Low with this report.
Strong growth across equities, currencies and commodities lifted net profits for SGX by 8.4% to $648 million. The firm says it's also on track to achieve a 6 to 8% growth in group revenue in the medium to long term. And it plans to keep growing its foreign exchange business through launching new products and adding trading tools to more platforms.
We will strengthen the network effect of our core derivatives business. The breadth and depth of our ecosystem, along with the cross-asset synergies of our offerings, allow us to scale efficiently through client acquisition and distribution. We will strategically expand our product shell by advancing our China and India corridors, broadening access across ASEAN too, and also other emerging markets.
From February to May this year, efforts to revive Singapore's equity market picked up pace. Authorities rolled out new tax incentives, offering up to 20% rebates to attract listings and a $5 billion investment push to support local companies. SGX also proposed easing listing rules, making it simpler and quicker for firms to go public. These moves have helped lift confidence. 5 IPOs have launched on SGX so far this year, compared to 4 in all of 2024. But one analyst notes that the policies are still in early stages, so the full impact is yet to be seen.
We need to see the $5 billion, for instance, getting deployed into the market so that it actually generates overall volumes. We also want to see additional policy measures as well, particularly around corporate governance in terms of increasing transparency, a bit like what Japan has done to drive more capital returns within the market, particularly from small and mid-sized companies that may be holding a lot of cash.
SGX shares closed slightly lower at just over $16, down nearly 2%. It's proposing a final dividend of 10.5 cents, bringing full-year payouts to 37.5 cents, almost 9% more than last year.
In an exclusive interview with CNA's Elizabeth Neo, SGX CEO Loh Boon Chye says he is confident that Singapore's stability and pro-business environment will help the bourse capture more opportunities despite global trade tensions.
To note, you have committed a steady quarterly dividend increases through the next 3 years. We're looking at, I think, 0.25% every quarter right to financial year 2028. And so what really is a message you want to send right now? And how will SGX, balance this payout with also investing in its continued growth?
We look to solidify and build a stronger foundation for our multi-asset platform. It has shown that with trade war, trade tariffs, shifting geopolitical shift, participants and investors are turning towards platforms, exchanges, where the business model allows them to diversify their risks, seek out opportunities. We will grow our OTC FX business further to register a low to mid teens growth. Our core derivatives continues to see very good traction, and in the stock market we have seen activity increase not just in the index and REIT sector but also in the mid-cap stocks. Retail participation has grown, cross-border flows through the shifting investment that we're seeing has also enabled us to capture the positive momentum.
Amid all this, the trade tariffs, trade tensions between the world's superpowers, do you think Singapore has an advantage as a perceived neutral financial hub, especially with what we see between the US and China? And how is it working to ensure investors of, our stability and neutrality as well as long-term viability?
Singapore has always known for its consistent approach and clarity of policies. Importantly, our economy is still resilient. More than that, this is a hub for not just the financial sector. We're the largest FX trading hub in Asia. There's also a commodity hubs. It's a conducive pro-enterprise business environment. In all of that, I think investors, participants will find Singapore and also our financial center, together SGX, a place where they can do business, access regional economies, and importantly, Asia standing out in a turbulent world will also allow them to grow their business.